Are our housing markets really going from bad to worse, as a headline said over the weekend? Falling auction clearance rates, rising vacancy rates. Well, we're going to unpack that and explain what's really going on in this week's Property Insider Chat with Dr. Andrew Wilson. We'll also talk about the latest unemployment figures, the cost of housing, and how the auction markets fared over the weekend. If you want to keep up to date with our real estate markets, please subscribe to this channel and click the little bell icon so we can let you know each time a new show comes out. Beware of headlines in the media trying to spook you, screaming doom and gloom about Australia's housing markets. Yeah, here we are again at the end of 2024, and Australia's property values proved themselves to be resilient, actually more so than many dared predict. Over the weekend, I was intrigued by a headline suggesting Australia's housing market is going from bad to worse. This article quoted falling auction clearance results. That usually happens at this time of the year, and it also quoted a high-profile auctioneer who had a bad run over the weekend. But why do pessimists keep getting it wrong? That's what I plan to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael. And it's Groundhog Day, isn't it? Groundhog Day, decade after decade, and the doomsayers, they come and go. And the only consistency really is that they're consistently wrong. I'm not sure how you could ever equate a poor year this year for Australia's housing markets. We're going to see our capital city house prices up by a very similar amount to last year, be close to 8%. So they're up 8% last year, 8% this year. Of course, last year was a recovery year following the near 10% decline that we had with higher interest rates. Of course, predictably pushing the market down, particularly impacting confidence. So the market fell in 2022, bounced back in 2023, made up for what it lost, and now it's back in the black. And gee whiz, I wouldn't call the Perth, Brisbane or Adelaide housing markets in any way under pressure because they're booming. In fact, house prices in Perth and Adelaide and Brisbane are up by nearly 40% over the past 2 years. So that's a remarkable increase in prices, and it's not just a recovery measure. It's just a very strong demand over supply measure in those capitals. And Melbourne's been an underperformer, but there are factors in Melbourne, such as the severe lockdown that they experienced, which have still impacted or still impacting confidence, in my opinion. But a closer look at the Melbourne market, and it's really the higher priced inner suburban areas that have kept Melbourne underperforming compared to the other capitals, and really mid-price and lower price markets in Melbourne have continued to grow. And I think what that really means that given the Melbourne is still Australia's second largest economy, capital city economy, and a very strong market, has potential for growth once the air starts to clear, particularly if we get lower interest rates, which everybody, perhaps except the Reserve Bank, is predicting for next year. But I think the next move is more likely to be down rather than up. And that's good news for all housing markets, maybe, but certainly good news for Melbourne going forward. But there's just no justification, as usual, for predicting doom and gloom. And our auction markets have actually stood up pretty well. And as you mentioned, Michael, predictably, we, at the end of every year, of every spring selling season, we see fewer buyers and more sellers. That's just the nature of the beast. That's a seasonal adjustment. And we're seeing that this year. But we've had almost record auction sales this year as sellers have come back into the market, and clearance rates have stood up pretty well in the face of what's been a surge in listings. So another positive year. I think we'll get prices growth again next year, and maybe not at the same rate we've had the last couple of years, but we still have a demand well ahead of supply, and a very strong economy, as last week for last labour market revealed, and that very strong aspiration for home ownership and home investment, which continues to underpin our housing market. So let's just look at the reality of the situation and just scratch our heads and wonder, how these types of headlines continue to get traction. But I guess the media needs something to attract clicks, and what else but falling house prices is the traditional go-to screaming headline.
Well, I think the market's far from going from bad to worse. It's continuing to grow, as you say. But there's always going to be property pessimists out there predicting a crash. But we've been around long enough to see it's the same commentators that have been calling for a collapse for over a decade, for longer, really, and they've been consistently wrong. But maybe a message of warning to the viewers of this, that over Christmas time, when you at one of your Christmas lunches, watch out for Uncle Charlie, because he's probably also going to tell you about somebody he knows who bought a property and it went down in value. And be careful, don't buy an investment property, don't buy a home. You know, even Uncle Charlie's going to get it wrong at Christmas lunch, Andrew.
Yeah, well, he won't be talking about Perth, Adelaide, or Brisbane because I don't think anybody's got that one wrong. If you're a homeowner, there you'd be celebrating Christmas with a big smile, and there's still plenty of upside to those three markets. So reality doesn't reflect these really quite silly headlines.
Well, another silly headline I saw a couple of weeks ago was that investors are exiting Melbourne, and Melbourne vacancy rates have gone up 30%. And it sounded dire until you see that the quote was that Melbourne vacancy rates have gone up from 1.1 to 1.3%, Andrew, which is still well below that
Yes.
2% that we believe is a comfortable level where rents are still, there's enough properties around for every tenant who's looking.
Yeah, I'll just go to any of those open for inspections for rental properties, and you'll still see long queues of people, with worried looks on their faces as they try to become the winner of the lottery, of the rental lottery, to
Yeah.
become a new tenant. And yeah, we've seen a little bit of a shakeout in Melbourne recently, particularly my housing market track not just overall vacancy rates, but we track unit and house vacancy rates separately. There's no doubt that unit vacancy rates in Melbourne have risen, but of course, a lot of that is because we've seen a restriction now from the federal government on student numbers coming in, and they make international student numbers coming in, and they make up a significant proportion of demand, particularly in those, I guess, suburbs in the university sectors for units. And I think that's had a bit of an impact on vacancy rates for units. But as you said, Michael, anything under 2% is clearly in favour of landlords and clearly means upward pressure on rents. And rents have stabilised recently, but I think that's because of our rental markets have been so tight that we've seen, some decision making, by those that have decided that the rental market's too tough. So, they decide to stay at home longer, or they share with siblings or friends, or they move to outer suburbs or even regions. But at the end of the day, as incomes continue to rise, we'll see rents rise. It's just a question of those income ceilings restricting people from pushing up rents. But there's no doubt that there's still a very tough market, mostly for tenants, our rental markets in capital cities, and likely to remain that way because there's not much we can do about it because of the notorious underbuilding that we've experienced over the past decade.
Well, looking at some of the economic factors that have come out over the last little while, the jobless figures have come in, and that's been a surprise over the year where despite more people
Yeah,
coming to Australia, despite the migration, despite the Reserve Bank trying to push up unemployment levels to moderate wages growth to
yeah,
slow the economy a bit, we're still creating lots of jobs. Not as many as the month before, but there's
yeah.
still lots more people employed now than there have ever been, Andrew.
Well, we've had a remarkable growth in jobs over the past year. Hundreds of thousands of new jobs have been created. Michael, it's been a tremendous performance by our economy, given those interest rate increases we had in 2022 to 2023. Really hasn't slowed the economy down noticeably. Of course, we were in the mid threes a year ago in terms of unemployment rates, but that was clearly unsustainable. They were the lowest unemployment rates, basically we've ever had. But certainly in the modern era, they were just quite remarkable, those low unemployment rates. And we've sort of moved up to something a bit more rational. But even when we've moved out of the threes, Michael, we're sort of holding now at just over 4%. That seems to be the new sort of level. And that's still a market, a labour market that, is in favour of workers, and still a market where there's plenty of competition amongst employers for what are still shortages of labour out there. And as you said, it's a good. The Reserve Bank wanted this so that they could help tap wage increases as a result of strong competition amongst employers for workers, therefore resulting in higher wages. But jobs were up 16,000 over the month. We sort of look at that and go, oh, that's not much, given we were having 50, 60,000 every month really over this year. But it's still a very strong result, and followed on 64,000 increase in jobs over September. We saw the unemployment numbers pick up, which we've been waiting for a while, but they're up by 8,300. So there were 8,300 more unemployed, but that followed a fall of 9,000 in the unemployed the previous month. So we really didn't even offset what we gained or what we lost in the number of unemployed the previous month. And the participation rate, which is a very positive measure of the performance of labour markets, was down a little bit to 67.1%, but that's down from the September result of 67.2%, which was the all-time record high. So these are, unprecedentedly high participation rates, and that, of course, measures the proportion of the potential workforce that's actually working, Michael. So we've got, we've never seen this sort of contribution from our potential workforce to people who are actually working. And interestingly, Brisbane had a big fall in the unemployment rate, down to 3.3%. Now, these monthly numbers can bounce around a little bit, Michael, because they're not seasonally adjusted, but still interesting to see the Brisbane unemployment rate at the lowest, 3.3, and below where it was a year ago. So, most capital city markets are just above 4%, with Melbourne the outlier, but still 4.5% is a positive result. And when we look at the trend, we're still well below, our unemployment rate at 4.1% is still well below where we were prior to COVID. And just above, slightly above where we were at our lowest points during that great mining boom in the mid to late noughties. So this is still a very low unemployment rate, Michael. And when we put that together with the very high participation rate, it means that we're not really masking anything here. People are finding jobs, and we're employing, almost the largest proportion of our population we've ever had in the workforce. So all good news there. Maybe not so much for the Reserve Bank, as you mentioned, but I think they're a lot more comfortable with their position than they have been. But let's remember quite clearly that they have said that they don't expect rates to fall until 2026, which is against what a lot of the predictions are saying. Everywhere I go, people are telling me, are you looking forward to the February rate cut? And I'm like, well, what are you talking about? But I think that's drawing a long bow, but we'll see what happens. But when we look at jobs growth, also, it's interesting that the Brisbane jobs growth over the past year, it has led all the capitals up by 6.6%, Michael. So that Queensland economy, or that Brisbane economy, is chugging along quite nicely, and perhaps another clear reason why the Brisbane housing market continues to be strong.
Well, it's interesting. Brisbane's got the highest jobs growth over the last year, creating more jobs, and
Yes.
yet vacancy, unemployment rates have been low. So, yes, that all bodes well for the Brisbane economy. And I guess that's going to continue over the next decade, because there's more people in, but also works are starting for the Olympic Games. They're only about 8 years away now, Andrew.
Yes, looking forward to that, Michael. But it's all working for the Brisbane, Queensland economy, and no surprise that's having positive influence on the Brisbane housing market, which, of course, now the underlying, or the median price, not the adjusted price, but the median price in Brisbane is now overtaking that of Melbourne. But of course, Melbourne, we have to account for those disparities in property price types, particularly the prestige market, which is very strong in Melbourne, and Brisbane doesn't have anywhere near the strength of prestige property when you account for that. The Melbourne median is still ahead of Brisbane at this stage, but certainly, as I mentioned earlier, that we've seen nearly 40% increases in prices in Adelaide, Brisbane, and Perth over the past 2 years, and I'm not sure anybody could sneeze at 40% in 2 years, Michael. I think you'd be pretty happy if you're a homeowner.
Not even Uncle Charlie at the Christmas lunch. Andrew, one of the things I know my housing market track regularly to give us an indication of what's underpinning house prices is what it costs to build a new home. We know a couple of years ago, prices of new construction skyrocketed, creating lots of issues in the building industry. It seems like things are coming under control again slowly.
Well, the rate of growth is certainly easing. The reason we highlight this measure, Michael, is because it's a significant factor that the ABS use in their house basket of goods. So their housing costs, they use the cost of building a new house as their primary cost. They don't look at the cost of building apartments. They look at the cost of building houses. So it's reasonably unique in terms of other jurisdictions that measure the CPI. So we have to look at that because it is a significant contributing factor. And of course, it has been over the past couple of years because we've had this, as you mentioned, this breakout in house building costs. And that came about by the previous government's home builder policy, which was designed through COVID to stimulate the economy. And certainly did that. And it certainly brought a lot of demand into the market. It offered incentives for buyers who were building new homes. But unfortunately, we didn't have the labour or the materials to cover that surge in demand. So, law of supply and demand, prices went through the roof. And we've only just recently seen an easing in the growth of house building costs, Michael, which is good news. But I think we have to put it into perspective. I mean, lower inflation means that the rate of growth of costs is easing, but it's not falling, Michael. That's the point. And when we look back 2 years to, when those house building costs started to skyrocket, we've actually are now paying 50% more to build a house than we did then, So that's quite a sobering, sort of statistic that, how much more you pay to build a new house now than what you did, or house building costs are up by 50%. So they're not falling, Michael. They're just not growing as fast as they were. And when we look at those growth levels, the latest monthly or quarterly data month to month shows, because the Reserve Bank looks at the quarterly data, of course, with its quarterly model, up by 2.8% over the year, house building costs, and that's over the year to September. So certainly a lot lower than a year ago where it was 10%, and a lot lower than the 23% annual growth that we saw at the peak at the end of 2022. So that's good news, but it's still above really where we were prior to COVID, Michael. But it's getting back into that, the realm of reasonable inflation in the building industry, cost inflation in the building industry. But still we're paying high prices. And I think that, that's part of the story, that people look at inflation and they think, okay, yeah, it's not rising as it used to, but costs are still very high in a relative sense to where they were. And that's what keeps consumers a little disgruntled and obviously still and marginalised and obviously still putting builders under some pressure to be profitable.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, each week we discuss the auction clearance results, giving us a good indication of what's happening over the weekend, how buyers and sellers are feeling it's the end of the year. People
Yeah.
are getting distracted. How did the auctions go over the weekend, Andrew?
Well, it was another fairly typical. We've already alluded to the seasonal factors in our auction market. It's interesting that when we look at the spring selling season, Michael, and that sort of starts at the end of August, and then it ends, obviously in the third week in December usually. But we sort of move from a market where it's good for sellers, and that's the early part of the market because we have fewer properties on offer. And therefore, that law of supply and demand means that typically we see higher clearance rates and higher prices. But as the market moves through the season, we obviously get fewer buyers because buyers have satisfied their requirements and they're moving into Christmas in their new properties potentially. And therefore, there's also that sense, well, let's wait till next year. And the difference with sellers is that there's fewer buyers, so there's more properties there. And sellers tend to be a bit more motivated because they want to clear their properties before the end of the year. Therefore that, they don't want to wait until, what is basically February or March next year when the market resumes. So that's why we see lower clearance rates every year, regardless of the cycle. But the weekend results, or when we look at the full week that were published on the weekend, Michael, it was quite interesting because, yes, we saw actually fewer listings, but clearance rates actually weren't, they were marginally lower, but I think both the listing numbers and clearance rates are sort of holding up and just are really reflecting the seasonal, fading of the market that we see over the last 3 or 4 weeks of the season. So if we look at the breakdowns, there was quite a drop in the number of auctions conducted over the week in Sydney up until the weekend. The clearance rate is still reasonable in Sydney, 67.2%. We're well below where we were a month or so ago in Sydney. And auction numbers are still higher than where they were at the same time last year, Michael, over the same week last year. And clearance rates aren't too far away from where they were last year. So we're still seeing that energy where we've got higher listings, similar clearance rates, but overall it means more sales that are actually being conducted at auction, Michael. So that's, again, a positive sign for the market that, we don't have to just look at the clearance rate and the auction numbers. We can look at, when we're looking at seasonal factors, we can compare year-on-year changes in the number of properties that are being sold under the hammer. Melbourne market actually picked up in terms of clearance rate, 63.9%. It too had a fall in the number of listings over the week, 1245 compared to 1452. But clearance rates were around about where Melbourne's been for a while now, in the mid-60s. And it was actually higher, the Melbourne clearance rate, than where it was over the same period last year, Michael, with listings around about the same as a year ago. Clearance rates a little higher. Brisbane's faded out a little bit over the past month or so. Its clearance rate, 45.1%, was higher than the weekend before. Auction numbers were up, but very similar to where it was a year ago. But as we say every week, Michael, the Brisbane market has a bit of a different attitude towards auction as a marketing tool. It tends to just be an adjunct to private treaty sales. So those lower clearance rates aren't necessarily reflective of what the market's happening. But we did see some remarkable clearance rates earlier this year and last year in Brisbane as it was going through that massive boom. But steady as she goes in terms of what we're seeing out of Brisbane. Adelaide, similar auction numbers. Adelaide's also faded over the last month from those remarkable. We were seeing, high 70s, low 80s every week in terms of Adelaide results, but now down into the mid-60s. And Canberra's been bouncing up and down, as we always say, sort of 2 steps forward, 1 step back with Canberra, waiting for a revival in the sense that Canberra market, which has been reasonably subdued compared to other capital city markets, and it had a 48% clearance rate compared to 59% the week before, and just a slightly below where it was a year ago. When we look at the trends, Michael, it tells the story. All of our capitals, that seasonal effect. Sydney market down just a little bit so far over November compared to October. Similar result there, but certainly lower than where we had in the peak spring markets of September and October, as we sort of described before. Why? Melbourne's sort of holding its own, as we said, in the mid-60s, really hasn't broken free from that sort of mid-60 results, Michael, for most of the year. So as I said, we're looking for a revival in that Melbourne market, which may come through the courtesy of lower interest rates impacting a revival in confidence. But when that occurs, well, we'll wait and see. Adelaide, again, like the other markets, has fallen from mid to high 70s into mid 60s. Again, that seasonal effect as buyers have overall satisfied their demands through spring. And we're seeing, as a result, higher numbers of listings in that Canberra market, just tracking a little bit lower than the previous couple of months. Again, reflecting perhaps not just the doldrums that the Canberra market's been suffering, but also the seasonal effects. And if you're looking for those auction clearance rates, every Saturday on my LinkedIn account, Doc Andrew Wilson at LinkedIn, you can get them between 6 and 6:30 of a Saturday night. That gives you the headline results for the capital cities, which is the latest clearance rate, the latest number of listings compared to last week's results and the same week, same time last year. And of course, the full national report is available through Michael's website on Sundays, and you can get the regional breakdowns for Sydney and Melbourne, as well as the top 10 sales in each of the capital cities, Michael.
Yes. Well, people are going to look at those figures and say, see, you're right, they are getting worse because auction clearance rates are going down. But that doesn't show the perspective that you've just shown that, yes, that's expected at this time of the year. The property markets have their ups and downs. There's no argument about that. But the long-term trend is up. And as we discuss each week, the fundamentals are looking very strong again for 2025. No reason to be concerned if you're interested in buying a home or an investment property. You just got to choose the right location and buy the right property.
And of course, most buyers are sellers and sellers are buyers, Michael. So it swings and roundabouts. If it's a buyer's market, that's good news for sellers. If it's a seller's, well, you know what I mean.
I fully know what you mean. And that's what a lot of people forget. Hey, there's more listings. People are bringing their properties on the market. Yes, they are, because they want you to right size, downsize, upsize. Yeah. And so that's just going to fuel the market continuing on next year, isn't it?
Yeah, and as we said, that those results are still looking a little better than where they were a year ago. And we're going to see around about the same price growth that we saw last year in our capital city, housing market model.
That's remarkable,
about 7 or 8%.
Yes, that's remarkable considering what's gone on in Australia and around the world. We'll be back again next week, and we'll each week keep talking about the various factors affecting the housing market. Thanks, Andrew.
Thanks, Michael.